Doing good today. Thanks for tuning in. I decided to make a video, and I'll be completely honest, I'm not good at this, so I apologize if I stutter. I'm trying to get more of these videos going up, and as I go, I'd like to improve. So I guess we'll just go ahead and get started on this. So today's Monday, as you can see already here. We got quite a bit of a red day, and this is the charts that I usually follow, by the way. These are usually the main ones that I follow, the layer ones that I'm interested in, and then I continue to go from there. So these are the ones they're on my watch list, right? That's what they're called. So those are the ones I follow the most. And out of what I follow, we've had a pretty significant down move today, but that's also not strange for a Monday. We tend to kind of have a selling going into Mondays, and volume tends to be less on a weekend. As you may have known, we had a pretty good green day, I think, Saturday morning, and that kind of tapered off towards the end, like Sunday morning close for the UTC time, and that kind of just went down from there. And that's pretty typical. Like, for the most part, I don't tend to enter trades during the weekend, regardless. I mean, it could go up 20%, it can go down 20%. But most of the time, I don't enter just because I know there's going to be more shenanigans. I know it's going to go up and down a lot more. And typically what happens over the weekend is not reflective over what happens during the week. But you can also use that to your advantage. So I tend to avoid it. Most of my trades are usually daily time frames or higher. Sometimes they're 8-hour, 12-hour, but typically the weekend doesn't factor into that. So I'm going to take a look here. Here is the weekly chart for Bitcoin, and I included here the 2018. Like, I started actually crypto right around here, right around this little order block, which seems like a big deal at the time, and now it's just like nothing, right? So it's like, what is this in comparison to all this, right? So I suffered through all this, but now we got this huge market structure right now, and we dumped from basically 69,000, probably more conservatively in the lower 65s, to now 22,000, roughly, a little bit less. And we even went down as far as, we even dipped into the 17s a little bit, depending on what you want to do. And if you guys might not know, I do, even though I don't trade Coinbase generally. Literally like 1% of the time, or even less than that. The reason I'm using Coinbase is because it has the most market history. FTX is one chart that I like to use, but it doesn't have the price history. So, usually for my videos, I'll probably put a longer price history. There's others that are longer than Bitcoin, or Coinbase rather. But 2015 is long enough. So Coinbase is usually my go-to chart. But we can see here, and a lot of people are are really, if I could step back, a lot of people are really doom and gloom right now, and mainly because of the economy and the way that it's going to look, and the way that people are kind of thinking the world's going to end, as far as things with inflation, things with the high prices for pretty much anything: food, gas, vehicles, and with all these FOMC meetings that I personally don't follow. I can get into that later. But when it boils down to what things should boil down to is, what are the charts saying? And I've mentioned this over and over again in my private Telegram. If you're not there, you can join. But one thing that I mention is that we should not follow these things, like all these little events, to guide us on what we think the charts will be. We instead need to focus and trade what the charts are currently. And a lot of times they match up. And that's the trick. I would say 95% of the time, even 99% of the time, they follow generally the same. Like, you're going to have bearish news during bearish times, good news during good times. But you can't focus on those things. Because at the end of the day, what tends to happen is you're going to get too focused on news, too focused on events, too focused on what should happen, and you miss the entirety of a major move. And that's what a lot of people have missed so far. I'll get back to this in a second. But a lot of people on Bitcoin and even Ethereum, once we broke down to 3 digits, everybody's like, all right, it's the end. It's the end. We're going to go to 400 Ethereum or Bitcoin. Oh, we're going to 12,000. And we might still. I'm not going to discount that, right? But if you did that and you missed out, let's say, you got in, let's say you even got in at the height of this candle, you'd be up 35% almost. And if you got out, you got even higher. And that's a pretty good move. Now, I'm not saying you should have took that move, right? But it's a move that a lot of people miss. Now, if you don't care about it, that's great. That's fine. But one reason I point that out is because with the news, we miss major moves. And the reason I brought up this down here in 2018, where I started, is because 20 grand was a big deal, right? We had all the shenanigans. This was the COVID issue. This block right here was when Elon announced that they were going to add Bitcoin to their Tesla sheet. I think this is when they claim to have sold it, but I think they may have sold it back here. Excuse me. Depending on who you talk to, who's a more reliable source. I honestly don't really care enough to even check because it doesn't really matter anyway. But we take these. I'm a big fan of these horizontal rays. Put it right here on the 20. Okay. So what do we got? This is legacy support. Here's an order block to support it that we went up. We attempted it. We broke through, and then we retested it here. And as you can see, depending on how you gauge this, and right there, we never went down. We never broke support on the weekly. And so that's what I'm trying to say to a lot of my followers and pretty much everyone is, hey, we have not broke support yet. With legacy support, literally the number one, most important line, we have not broken. And we have no reason to think that it should break. We have no reason to think it should break. I don't care if you think that we're going to 1,000 and you got solid proof that we're going to 1,000. That's great. I'll short with you. But right now, it has not broken, and I don't see a reason to short until we break that point. Because you mean to tell me, otherwise, what you mean to tell me is we are going to break literally the support of all supports for the past, 5 years? 6 years? Over 1,700 days. So, and yeah, there hasn't been a lot of testing of that, but that's what we're doing right now, right? So that's what I see. That's the macro move to me. I'm not interested in to short a single second, even on lower time frames, because I just don't feel that that's a good risk to reward scenario right now. But let's look on the daily and see what else we got here. So, and I can bring up all my other, I got my Aroon stuff here in a minute, but I tend to look at the price action first, see what the indicators say in response to that, and then just move on and work with whatever has confluence. So, right now, this is my Aroon band, which I'll disable here for a second. And we got very simple. We got a low structure here, went up, it tested the low, broke through. We started another order block here, and then we end up getting a low right around here. You could probably judge it here. We did attempt to go down, failed, came back up, broke through again, and now we have another order block. But this one, however, is very different. Let's see if we get this right here. There we go. This one's very different. So this one actually broke above, and this break above could be something like this. So we got 1, 2, 3 up, and now it's starting to go down. This one broke 3 times, went up. It did go down again. It failed to make a new high, and it broke down. So we can use this structure as the same for this structure. 1, 2, 3, broke above, it's going down. I have this marked here because this is the trigger point. We want this to hold. If you're a bull, you want this to hold at 21.6. If that breaks down, we're in danger of doing this. And here's the thing, this even may hold and fail to make a new high. So right now, what I would do is I would not trade this right now. I would be tempted to long this, and that's a good longable attempt. I mean, I would long it on the condition that I sell it above here, but 21.6 to 23.6. I mean, it's a decent move if you want to pull that off. If you can think you can pull off a 7% move, feel free to do it. I'm not gonna say that that's the right move, but I'm not gonna discourage it either. And, to be honest, I think I would discourage it because I would rather, if someone wants to long this, wait until we bounce here and reclaim this, because this is pretty strong, right? So you don't want to just go here and then it goes back down. You'd have to quickly get out, kind of what this did, right? So what I would do is I would long somewhere around here, long in this area, or I would wait till it breaks here to short. Simple as that. Wait until price action hits one of these areas, and then long or short accordingly. That's what I would do, because that's a higher convicted move, that you're not necessarily exposed to probabilities. And for me, trading is all about probabilities. What can I find where I can get the highest accuracy or the biggest move? That's it. And if I can get both, that's even better, right? So that's what I look at, probabilities. I don't care how much money you can make by gambling away on these charts. I don't care if you spend 18 hours a day at these charts, making $10 or whatever you're trying to do. Like, you're not optimizing your time. What I try to do is I optimize my time. I look at hundreds of variables over the course of the 5 years I've been doing this, and I've been doing stocks for 2 or 3 years before that. So, I'm running on 8 years experience here. And the thing is, I look for the most probabilities, look at confluence, look at what has the highest accuracy. And let's say I come up with 50 of those, right? Or let's just say I come up with 100 of them, make the math easier. I come up with 100 ways to trade. Well, only 20 of them actually are worth anything, right? Get rid of the 80, focus on the 20. Out of those 20, guess what? I found 5 that are much more much more effective than the other 15. Guess what? I get rid of those 15. Even though they could make me money, these 5 can make me more, right? So out of these 5, boom, you got a higher accuracy, double the size, triple the size, even 5x that size. Do what you got to do to maximize those probabilities and make them work in your favor. But this is what I would do. And, as you can see, we're getting a pretty strong move as it is. So I would just chill, especially with that meeting coming up. It tends to be volatile. I don't really agree with that statement that I just said for reasons I'll get into, but it is what it is. So, but that's what I'm looking at. So for the Aroon, my Aroon band, which is a band that I created, we're still in a bullish territory for the daily. I believe that we are also, no, we are not bullish for the third day. I thought we were. So I think that might be Ethereum that we are. One of these coins we are. So what tends to happen on the Aroon band, and again, this is a band that I made. This is proprietary. You can buy it off me, but I don't typically advertise it, is we get strong reactions to the band. If we get strong reactions to the band, we're going lower. So we went up here, bam, hammer, hammer. This one went up, it kind of ranged a little bit, and we went down again. Hammer, hammer, hammer. So that's the thing. The band is designed to where most of the time we get a reaction inside the band, and that reaction determines what we're going to see next. And so right now, the colors. So the red or the blue here is bullish, and then the dark gray is bearish. Entered a bearish scenario here in April. We have failed to gain long-term 3-day bullish momentum right here. So that tells me not to enter just yet, that it could be a fake out. And I could be wrong, and sometimes it is wrong. So I, make sure I follow it up with certain confluence. But if we look at the Aroon here, this pattern right here, this is a consolidation pattern, consolidation, consolidation. This is a wedge. A wedge is when we have one line that's flat, one line that's going down. If you got two lines going down, that's consolidation. The leading trend is always, almost always, 99% of the time, probably not 99%, majority of the time, and I'll get to the exceptions in a second. Most of the time, the one color that's on the bottom is the stronger trend. So black is bearish. So we have a bearish consolidation. And so what bearish consolidation means is that the price action is actually still bullish, right? So like this structure right here is a bullish structure. We did consolidation here, range, we moved up. Once we moved up, that became bullish. Doesn't matter if it's already down here. It's still technically a bullish structure. And I don't typically like calling that at face value, but that's how the Aroon gets interpreted over how I've interpreted it over the years. Because you never know. This can go straight up, and this still retains bullish structure. See what I'm saying? So that being said, this is consolidating down, and that's why ever since this top move, it's been going down. The price action has been going down during a bullish structure. That's why you get consolidation here. And this is also a bearish consolidation, but this also ranged. So that's why you got a bullish structure. The strength of the consolidation also helps determine what the future move could be. So, for example, this was a bullish consolidation right here, and it turned into a bullish wedge. So a bullish wedge tends to give you a stronger price action because this bullish part is, it's as low as it can go. It can't go any lower than 0. And it'll show 0 here. You can't really see it, but the lowest it can go is 0. So as far as bullish momentum, it's reached its peak. It can't get any less bullish than it already is, right? However, the bearish price action can lose strength, and that's what it did. So it lost strength, but it lost strength while still going down, which means bears were still in control. So despite the bulls having a chance to make that happen, it did not happen. And that's why we got a relief pump. I would consider that mainly a relief pump. And that's why we eventually broke down. Because bulls just did not have enough strength. And that was a sign of a lack of strength. So right now, this pattern seems to be going pretty much as I would expect the Aroon to go. And it's starting to go down a little bit more. So this is the critical point here. As I said, if it breaks down, we short. If it goes above back to 24s, we long, and that's how I see it. Other things, RSI and Awesome Oscillator, I use those in Confluence for the rest of my stuff. And this here is MVRV score. It's what I use to look at long-term scenarios. If we break the green, simply put, it's a good long-term opportunity to go higher, but we're not there yet. So, all right, that's Bitcoin. Ethereum. Check the weekly, and I'll try to go a little faster because I don't want this to be a 2-hour video because I know I can ramble. Get rid of this here. Not sure why that was there. Sorry, let's go to Coinbase. All right. Same thing, but look here. We broke down, and we actually went above. So this could be the reason why a lot of people think that the Bitcoin one was going to fail, because this did fail. Now, I don't think that we should look too much into that, to be honest. It is what it is. I look at it this way. You always need to look at support and resistance as support and resistance. And what I saw here is this deviated back up. And that's actually a much more bullish sign than you think it is. So as long as this stays above 1400, I'm bullish. Long term. Not necessarily short term. So same thing here, from Bitcoin. It seemed to stop here. Some sort of order block activity, but nothing on high level that indicates that's strong. So we got the bullish Aroon consolidation going into a wedge. So I would like to see this continue higher. We'll see. But that's fairly standard. Weeklies are much more predictable on the Aroon. Let's go to the daily. One thing that I've noticed about this is this kind of block structure is very blocky. I don't really have a word for it, but it's not super organic as far as like these are the candles, the way that they go. This is like there's contention here. So for whatever reason, this is not really being broken, mainly because that's a big area. And the fact that it's not getting broken, and we got a good breakdown right here so far is a bad sign. If this cannot stay above 15.15, then I think that we are in some trouble for the week. And sorry. So that's something to consider. Sorry. So that's something to consider. We don't really want that to. Bulls want this to hold. Bears obviously do not. This is your next one, 1361. And why do I say that? Because you had this overthrow right here. And your next one is here at 1244. So I can mark those down here. And it's really just as simple as that. Support and resistance. And, one off another. This here, depending on how you want to interpret this could also be a deviation right here. I think it's a little too small to consider, so I would just put it right there. Despite the fact this is a bearish engulfing, and I can check this here. I got these little engulfing indicators. So you got one here. I do compare this to the Aroon, even though this is not my indicator, the engulfing one. But the Aroon band is my indicator. If this goes here to the medium point, typically it goes straight through. So that's something to watch out for. But right now, I'm not trading this. I think we're too close here to the highs of this previous order block at 17. I don't want to trade. I typically, on an order something weird like this, I usually don't trade until we go above here. The local high, usually the second candle high. So that's probably where I would enter in. Another thing for me is if we go to the 3-day or 4-day, for example, I look at the 4-day a lot because it's an easier it's you get all the representation of a high time frame chart, like the higher ones, like 1 week, 2 week, 1 month, with more noise of a lower time frame. Sometimes I think 1 day has too much noise for long term trades, but for my band, we've been bearish since 29. So until this moves blue, I am not interested in either way. We've had a flat bearish wedge or bullish wedge that's relatively healthy, but something I don't really watch out for on these time frames. So, but that's that with that. I'm not interested in longing this just yet. I think shorts, it's too late to short. On my Aroon signals, we did get a short here on the 12-hour. That's the one that I said on Twitter that I missed, and I should have entered there, right here. For some reason, I was too busy, and I didn't even get the signal till about 1 hour before it happened, and I was busy, and I missed all this. So not a big deal. I've missed things before. But missing on a 7% move that I knew I had to take is just unfortunate, but it happens. So I think for now, I was going to do Solana and AVAX. I think I'll go through it really quickly because I don't want to make this too long, and there's not really much to talk about anyway. The structure, it went above, it broke below. This is a deviation. That's pretty much all you need to know. If you don't include the wicks, bulls, you want this to support at 34.71. Even if that does hold, you still got a ways to go. So I'm kind of disregarding this right now. My same, 4-hour theory, we're still below the major trend line right here. In fact, we rejected pretty good. So that's another indicator. And again, right at the band I was talking about, this is just something to avoid right now, in my opinion. I'm not interested in Solana until above 50, or unless we go lower. If we go down here back to lows, I'm a buyer. That's about it with Solana. Although it does look good on some instances, just not good enough. I'm becoming more interested in it. So next one, Avalanche. We got this big major structure on the weekly. This actually looks good from a high time frame perspective. This is something that I would definitely be a buyer if we ever got to the 15 range again. I did not buy. I wish I did. And so daily, we got sell signal there. Let's see if I can get a different time frame here. So I did get the buy signal here, but same scenario as Bitcoin, really. Breaking below, we're right on that edge. So same scenario, long above here, break short. I probably wouldn't short at this. The structure's too complex at the time for now. And plus we already went down almost 10%. So it's something that I wish I could have shorted, but you can always say that, right? So that's that for the big four. With other things, I think I mentioned it with the FOMC news. I'm just not interested in it, to be honest. Typically, it tends to lend itself to volatility, tends to lend itself to speculation. The volatility is good if you can play it, but it also lends itself to unpredictability. and that's the key factor for me. It doesn't give me a higher it gives me a less probable chance to play anything on the bearish or the bullish side. So if probabilities are not in my favor, I'm just not interested. And that's been the case, honestly, for pretty much all those meetings for this year. There's been too much speculation around it, and so much so that it kind of distracts people from looking at what the price action is going to do. And so, like, we've had some bearish things with those meetings throughout the year, but the whole market's been bearish anyway. So what are you talking about? See what I'm saying? Like, one day isn't going to make or break 6 months, relatively speaking. And the thing is that people that use those meetings to conform to bias are going to conform no matter what, whether that's a bullish scenario, bearish scenario. I can make any scenario happen. I can get a list of bullish news or bearish news, and I can try to create my own structure, my own bias. But the point is, you just want to follow what's on the chart. So that's how I feel. Yeah, the economy sucks and inflation's getting higher and things like that, and we're going to try to remedy this thing. But also, like, this is, that's one part of the world. I know they have a big part of the, one of the top currencies in the world, and I get that, and I understand what that all means. I really, really do. But at the end of the day, you got to follow the charts, because what I think is crypto tends to have, well, and let's look here at the chart. Crypto tends to have this thing where it outpaces the rest of the market. It's always done so. And, we could say, like, well, during the recession in 2008, everything, the housing market crashed, but Bitcoin was around, so we don't know what it's going to do. And yeah, you're right. We don't know what it's going to do, right? But at the same time, we also don't know what it's going to do in the opposite direction. Like, and COVID was a perfect example. Right here was when this is when Trump announced that they were going to do lockdowns in the United States. And I don't know what was going on in other countries, but we did crash. And this right here was the most opportune time to buy in probably one of the top 3 times to buy since I've been trading crypto. And some of you got it and some of you didn't. And it's okay. That's not an easy thing to get. But right here, everybody was freaking out, right? But all you had to do was hit buy. And it's just that easy, but it's also not that easy. See what I'm saying? But what happened here is everything started going up. When the world was starting to go on fire and starting to go bad, that was the most opportune time to buy. And also, one thing I also noticed, you have this order structure here. I think I bought it this candle actually, and I was frustrated and I just stopped. I actually stopped trading this, but it went back up. I'm like, oh great. But this candle went through all this, so we had to retest that. And guess what? Put that here. We retested it during COVID. So despite the fact that there was so much craziness going on, the market did exactly what it was supposed to do. Okay? And that's the thing. That's what I expect here. I just expect the market to do what the market's going to do. Okay? Markets are all based on behaviors, right? So you just got to play those behaviors out. And that's all there is to it, So that's... Anyway, I don't want to talk too long. It's my first video in a long time. Let me know what you think. And let me know if you like these videos, especially if you like them. Feel free to just shout me out on Twitter or Telegram. Just let me know if you want more, because this has been the top request that I've had for a long time, and I want to start doing some of these weekly videos. I think I'm going to try to do them before this late in the weekly open, but I want to try to get them about about 10 hours ahead of now. So just let me know what you think, and yeah, I guess I'll see you next time.